What is happening, crypto enthusiasts, and welcome back to Bitcoin Bulletin. The market is on fire, the news cycle is spinning faster than a DeFi transaction, and you are locked in for the must-know updates that are shaping our financial future. Get ready, because we've got a packed show with insights that could redefine your strategy. Let's get straight into it. First up, we're talking about the big one, Bitcoin's potential to hit a mind-blowing $200,000 by the end of the year. This isn't just speculation. Analysts are pointing to powerful forces driving this surge, and we've got the breakdown. Next, we're shifting gears to a major player in the investment world. A prominent firm has seen its second quarter growth significantly boosted by its Bitcoin holdings, and the implications are massive. We're talking about a move that's bringing it closer than ever to inclusion in a major stock market index. What does this mean for traditional finance and the crypto space? Then, we hear from a voice that always makes waves, Anthony Scaramucci. He's making a bold prediction, forecasting an astronomical rise for Bitcoin, suggesting it could reach a staggering $500,000. We'll unpack the reasoning behind his incredibly bullish outlook and what could fuel such an unprecedented climb. And finally, in a development that could signal a major shift in capital allocation, we're looking at Ethereum's institutional inflows. Are they starting to outpace Bitcoin? This could be a tectonic shift in the crypto landscape, and we've got all the details you need to stay ahead. Stick around for all these massive updates and more. Don't forget to hit that like button, subscribe if you haven't already, and ring that notification bell so you never miss a crucial update. Bitcoin's astonishing ascent, a $200K future. Bitcoin is currently trading at $109,508, showing a modest 0.5% increase over the last day, though it has seen a 3.6% dip in the past month. Despite this short-term fluctuation, BTC has demonstrated remarkable year-to-date growth, standing at an impressive 88%. It's important to remember that Bitcoin recently set a new all-time high, soaring above $124,000 in mid-August, a level it has struggled to maintain since. Despite the recent consolidation, the outlook for Bitcoin remains exceptionally strong, with numerous forecasts clustering between $180,000 and $250,000. Analysts are increasingly confident that the world's premier cryptocurrency could indeed reach the $200,000 mark by the close of the year. While price targets can vary significantly, ranging from a more conservative $145,000 to over $1 million in extremely optimistic scenarios, a consensus is emerging around three primary catalysts. The introduction of U.S. spot Bitcoin exchange-traded funds, ETFs, earlier this year has been a game-changer, unlocking significant demand from institutional investors. Standard Chartered, for instance, projects that these ETFs alone could facilitate billions of dollars in inflows throughout 2024. This influx of institutional capital is a key driver expected to propel Bitcoin's price into the $200,000 to $250,000 range by December. Another significant factor is the anticipated Bitcoin halving event, a pre-programmed reduction in the rate at which new Bitcoins are created. Historically, halvings have been followed by significant price rallies as the reduced supply meets sustained or increasing demand. This supply shock, combined with growing adoption and the aforementioned ETF inflows, creates a potent mix for price appreciation. Furthermore, the increasing adoption of Bitcoin by both retail and institutional players continues to build a strong foundation for its long-term value. As more companies integrate Bitcoin into their treasuries and more individuals gain easier access through regulated products like ETFs, the network effect strengthens, driving demand and potentially price. The market is buzzing with these projections, with many investors and analysts closely watching the interplay of these factors. The potential for Bitcoin to achieve such a significant price milestone by year-end is a hot topic, reflecting a growing confidence in its role as a digital store of value and a burgeoning asset class. But will these catalysts be enough to push Bitcoin to such heights? Stay tuned as we explore the next major development impacting a key industry player. Strategy's crypto gains fuel Q2 surge, S&P 500 on the horizon. A prominent investment firm, Strategy, has reported a substantial boost to its second quarter performance, largely driven by its significant holdings in Bitcoin. This strategic allocation has not only bolstered the firm's financial results, but also brought it notably closer to meeting the criteria for inclusion in the S&P 500 index. This development signals a potentially monumental integration of digital assets into the traditional financial ecosystem. The firm's Q2 earnings reveal a robust growth trajectory, with its Bitcoin investments playing a pivotal role. While the exact figures of their Bitcoin holdings and the precise impact on their revenue are detailed within their latest financial disclosures, the narrative is clear. Holding Bitcoin has become a significant driver of growth for major financial players. This success story is particularly noteworthy given the volatile nature of the cryptocurrency market, underscoring a maturing understanding and acceptance of digital assets as a legitimate investment class. The proximity to S&P 500 inclusion is a critical element of this story. Inclusion in this widely tracked index would mean that Strategy stock would be automatically included in numerous index funds and ETFs, dramatically increasing its visibility, liquidity, and investor base. For a firm that has actively embraced Bitcoin, this potential inclusion represents a powerful validation of its forward-thinking strategy and its belief in the long-term value of digital assets. It suggests that traditional financial markets are increasingly recognizing and rewarding companies that strategically incorporate cryptocurrencies into their portfolios. This move by Strategy is being watched closely by the broader financial industry. It could serve as a precedent for other asset managers and corporations considering similar allocations. The growing institutional adoption of Bitcoin, exemplified by this firm's performance and strategic positioning, is a key trend to monitor. It indicates a shift where digital assets are no longer fringe investments, but are becoming integral components of diversified investment portfolios, even for entities traditionally focused on conventional markets. The implications extend beyond Strategy itself. If the firm successfully integrates further into the mainstream financial landscape, it could pave the way for greater acceptance and easier access to cryptocurrencies for a wider range of investors. Analysts are keen to see how this plays out, as it could influence regulatory perspectives and encourage further innovation in the intersection of traditional finance and digital assets. Audience impact. The market is reacting positively, with many seeing this as a strong signal of institutional acceptance and a potential catalyst for further crypto adoption in traditional finance. But is this the only bold prediction making waves in the crypto world? Get ready for an eye-popping forecast from a well-known financial personality next. Scaramucci's sky-high Bitcoin forecast, $500,000 target explained. Anthony Scaramucci, the founder and managing partner of Skybridge Capital, has once again made a bold prediction about the future of Bitcoin, forecasting that the cryptocurrency could skyrocket to an astonishing $500,000. This extremely bullish outlook is not without its reasoning, as Scaramucci points to several key factors that he believes will drive Bitcoin's unprecedented growth in the coming years. Scaramucci's optimism is deeply rooted in his belief in Bitcoin's potential as a digital store of value, often comparing it to gold. He argues that as global economic uncertainty persists and traditional financial systems face challenges, investors will increasingly seek alternative assets that offer scarcity and decentralization. Bitcoin, with its fixed supply of 21 million coins, perfectly fits this narrative, making it an attractive hedge against inflation and currency debasement. Furthermore, Scaramucci highlights the increasing institutional adoption of Bitcoin as a major catalyst. The approval and subsequent inflows into U.S. spot Bitcoin ETFs have opened the floodgates for traditional investors and large institutions to gain exposure to the asset class. He believes this trend will only accelerate, bringing more capital into the Bitcoin ecosystem and driving up its price. As more corporations add Bitcoin to their balance sheets and financial products become more accessible, the network effect of Bitcoin strengthens, further validating its value proposition. Another crucial element in his prediction is the upcoming Bitcoin halving events. These programmed reductions in the rate of new Bitcoin creation act as a supply shock, historically leading to significant price increases as demand continues to grow. Scaramucci anticipates that the cumulative effect of these halvings, combined with increasing demand, will create a powerful upward pressure on Bitcoin's price. He also emphasizes the potential for Bitcoin to become a dominant global currency or a significant part of the financial infrastructure. As technological advancements continue and regulatory clarity improves, Bitcoin's utility and adoption could expand, further supporting its valuation. Scaramucci views Bitcoin not just as an investment, but as a fundamental technological innovation that is reshaping finance. Scaramucci's $500,000 target is a long-term vision, contingent on continued innovation, widespread adoption, and favorable macroeconomic conditions. However, his conviction stems from a fundamental belief in Bitcoin's unique properties and its potential to disrupt traditional financial paradigms. His pronouncements often capture the attention of the crypto community and the broader financial world, sparking debate and highlighting the immense potential many see in Bitcoin. Audience impact. This prediction has generated significant excitement and discussion within the crypto community, with many finding inspiration in such a bold, long-term price target. While some are looking years ahead, another story suggests a significant shift might be happening right now. Prepare for a look at Ethereum's recent performance and what it could mean for the crypto market. Ethereum's institutional surge, outpacing Bitcoin's inflows. In a development that could signal a significant recalibration of capital flows within the cryptocurrency market, recent data suggests that Ethereum's institutional inflows may be beginning to outpace those of Bitcoin. This trend, if sustained, could represent a tectonic shift in how institutional investors are allocating their digital asset portfolios, potentially favoring Ethereum's ecosystem and its associated growth prospects. The emergence of spot Ethereum ETFs in the United States, following the successful launch of Bitcoin ETFs, has opened up new avenues for institutional capital to enter the Ethereum market. While Bitcoin ETFs have seen substantial inflows since their inception, the narrative is now evolving. Analysts are observing a notable increase in interest and investment directed towards Ethereum, driven by its robust smart contract capabilities, its foundational role in decentralized finance, DeFi, and the anticipation surrounding upcoming network upgrades. Ethereum's utility extends far beyond being a mere store of value. As the backbone for a vast array of decentralized applications, dApps, including DeFi protocols, NFTs, and the burgeoning metaverse, its inherent utility is a significant draw for sophisticated investors. The potential for staking rewards, coupled with the ongoing development and adoption of Layer 2 scaling solutions that promise to enhance transaction speeds and reduce costs, makes Ethereum an attractive long-term investment. This potential shift in institutional preference is being closely watched. For years, Bitcoin has been the primary gateway for institutional money into crypto, largely due to its established reputation as a digital store of value. However, Ethereum's growing ecosystem and its potential for greater utility-driven growth present a compelling alternative. If institutional money begins to flow more heavily into Ethereum, it could validate the digital oil narrative and significantly impact the broader altcoin market, potentially leading to a period where Ethereum outperforms Bitcoin. Market analysts are scrutinizing the data to understand the underlying drivers of this trend. Factors such as the upcoming Ethereum upgrades, such as further advancements in its proof-of-stake consensus mechanism and scaling solutions, are likely playing a role. The increasing institutional comfort with the Ethereum ecosystem, supported by regulated products and a growing understanding of its technological underpinnings, is also a key contributor. Audience impact. The crypto community is abuzz with this potential shift, with many seeing it as a sign of market maturation and a growing appreciation for Ethereum's technological advancements and utility. And that's a wrap on our top stories for today. We'll be right back with a quick recap and all the ways you can stay connected. And that's a wrap on today's explosive updates. We saw Bitcoin potentially heading for $200,000 driven by ETFs and halvings, a major firm's growth powered by Bitcoin holdings, and eyeing the S&P 500. Anthony Scaramucci predicting a massive $500,000 Bitcoin surge, and Ethereum's institutional inflows possibly overtaking Bitcoins. Don't miss out on any of this action. Make sure to smash that like button, subscribe to Bitcoin Bulletin for more vital crypto news, hit the notification bell to stay updated, and let us know your thoughts in the comments below. For even more insights and real-time updates, follow us on all our social media channels. Stay informed, stay invested.